Bitcoin, by the way, also higher by more than 1% today after the former president appears to have changed his tune on the digital currency this election cycle. Back in 2019, let's recall, he said, "I'm not a fan of Bitcoin and other cryptocurrencies, which are not money and whose value is highly volatile and based on thin air. Unregulated crypto can facilitate unlawful behavior, including drug trade and other illegal activity." Again, this was the president in a tweet from 2019. Well, fast forward to last month. While campaigning for president once again, he's presented himself as a champion of Bitcoin after posting this on Truth Social, quote, "Vote for Trump. Bitcoin mining may be our last line of defense against a central bank digital currency. Biden's hatred of Bitcoin only helps China, Russia, and the radical communist left. We all want the remaining Bitcoin to be made in the USA. It will help us be energy dominant." This Saturday, Trump is scheduled to speak at the Bitcoin 2024 conference in Nashville, where rumors are swirling that he will announce plans to make Bitcoin a strategic reserve asset. Ahead of that, Dom Chu has a look at how it's doing in the meantime, Dom.
Those are all factors, Kelly, as to why we saw a bounce for Bitcoin prices off this kind of medium-term level that we've seen here, just around the mid-50,000s mark. Once we hit that level, it's been about a roughly 20+% move to the upside just over the course of the last 2 to 3 weeks. That's how fierce it's been. And we went from a low of around 54,000 just about the beginning of this month up to 66 where we are right now. If you take a look at some of the other moves, Ethereum, now that we have ETFs tracking some of those prices, we've seen a nice little bid up here again over the course of the past 2.5 to 3 weeks for Ethereum prices, down on the day still, but still above 3,400 at this point. That's a small victory for some of those enthusiasts. With regard to some of the stocks in the ecosystem that track cryptocurrency, look at exchange operators like Coinbase, which again caught that nice little bid, the blue line up here. Marathon Digital, a Bitcoin miner, has not seen as much action given the rise in Bitcoin prices. Concerns about mining costs there may be playing to the discussion. And MicroStrategy, which owns Bitcoin on its balance sheet, has seen a nice move higher as well here on the rally in Bitcoin. So keep an eye on those company stocks. I'll send things, Kelly, back over to you.
All right. Appreciate it, Dom, very much. Dom Chu. My next guest, bullish on Bitcoin, and in a new report released today, makes the case for how it could reach nearly $3 million a coin by 2050, driven in part by its adoption as a global medium of exchange and as a reserve asset. Here with me exclusively on the exchange is Matthew Siegel, head of digital assets research at Van Eck. It's great to have you here.
Hey, Kelly.
Tell me everything. What do you got?
Well, as we look at the world right now, we see enormous economic imbalances, rising distrust of existing institutions, and continued deglobalization, both of our physical supply chains and also of our digital infrastructure. And we think that many of these distortions stem from the same underlying reason, and that is a massive misallocation of capital since the global financial crisis, as G7 governments have abused the printing press, spending borrowed money on impossible goals like net zero, some of these foreign wars, and mass surveillance. And as a measure of how much they've spent, we estimate in this report that G7 governments are going to be spending 30% of tax revenues on interest expense. 30% of tax revenues on interest expense
is already, it's bigger than defense. It's like half of the deficit.
This is 30%, right?
But let me ask you a question.
So an increasing number of our trading counterparties are saying no more. They have done this math too, and they object to the use of funds. And it's our take that Bitcoin, as the first global, decentralized, immutable, censorship-resistant, fixed supply digital asset, which is tied to energy production, is the ultimate hedge on this rising fiscal recklessness.
So one thing that's so interesting to me about this, I think Bitcoin has actually proven its own, that it rivals in many ways the gold, that it is a decent store of value. It tends to hold its purchasing power against the dollar. It's performed pretty well. I mean, I think everybody universally would acknowledge that it's novel. It may have some downsides to usage, but that if nothing else, it's held its value. Here's where I don't track, and you can explain to me. How do you get from wherever we are, $68,000 a coin today, to $3 million by 2050? What is the average annual rate of return that you foresee? Because gold has, it's done well over the past 20 years, better than stocks. But I think we're now talking about its rate of return picking up quite substantially?
You'd be surprised. So our medium-term price target for Bitcoin is $325,000 by 2030. That's a 32% CAGR, compound annual growth rate. In order to get to the 2.9 million by 2050, that's only a 16% annual CAGR, so half the amount of growth.
Don't you think 32% is a bit aggressive for the near term, though?
Well, when we've seen past cycles and what tends to happen the year of the Bitcoin halving and after some of these presidential elections, and with some of the policy changes that we expect potentially in the new administration, that could catalyze significant growth. But in this report, we are assuming a bit of a 0 to 1 moment, that by 2050, 10% of international trade is denominated in Bitcoin. 5% of domestic trade, and that central banks initiate a position in Bitcoin at a roughly 2% weight. And for context, central banks have a 22% weight in gold. So this is not a huge lift. We don't think that these assumptions are tremendous.
This was always the argument Bill Miller made, that if you get anything approaching the way that gold has been adopted, it's quite bullish. Just finally, and with the Bitcoin conference coming up this weekend, what is the fundamental argument for a Bitcoin national reserve, or whatever the term may be? Even as someone who understands conceptually why people would use Bitcoin, what is the idea of a U.S. national reserve of it? What does that achieve other than incentivizing mining here that boosts activity and so forth?
Well, I mean, that's a good reason. If we don't do it, our trading counterparties will. That Bitcoin production is reliant on low-cost energy, and it is in the nation's interest to be energy dominant. So there are a number of countries that have significant sources of energy that they could use.
We want to get to that 21st. There's how many left? 2 or 3 million still to mine. Yep. So we want the U.S. to mine as many as possible to capture the economic benefit of doing so?
Correct. And I think that Trump can do this very easily on Saturday in Nashville, simply by announcing that he will instruct the Attorney General to not sell the roughly $10 billion of Bitcoin, which has already been seized from criminals who've used this technology in the wrong way.
Is Harris appearing at this conference, or is that just a Twitter rumor?
Well, there's news on the tape a couple hours ago that she would not be appearing.
I see. All right. So I know many people, Novogratz, talked about this. They don't want it to be a partisan issue. Republicans pro, Democrats against it. So she has an opportunity to maybe change that. But we'll leave it there for now. People can find out a lot more information about your findings. And thank you for bringing it to us, Matthew. We appreciate it.
Thank you.
Matthew Siegel with Van Eck.